The broadcast is now starting. All attendees are in listen-only mode.
Hello, everybody. This is Jamie Maloney. Thank you all for attending my webinar here on REO Accounting with QuickBooks. Briefly, a little bit about me if you don't know me. I am a master broker in Florida, one of three of us down here. I was recently at the NRBA conference and gave this presentation as well on QuickBooks. How this came to be is last year I had written a manual on QuickBooks, how I handle reimbursements within my office. Took it to the directors. They liked it, and at the last NRBA conference I got an invite out there to teach this to the membership, as there's a lot of interest in QuickBooks, as many of us are not trained and are just kind of learning this program kind of on the fly. So I think you'll get a lot out of this webinar. I'm going to go through basically how I handle the flow of funds through QuickBooks with regard to reimbursements. A little bit more about me. I'm based out of the Tampa, Florida area, and I lead a team of REO agents, and together we've centralized our billing operations, with me being the head of the billing department. And so all the other team members pay me a referral to handle the billing for them. I pay all the bills, I turn on and off the power and water, handle utility deposits, and I submit bills for reimbursement to their client through their respective systems, and the banks reimburse me through my PA. System works very well, but it's given me a lot of experience with QuickBooks. One of my teammates who is also an NRBA member, Christina Griffin, works on my team, and she produces a lot of sales, a lot of properties, and so last year, we had upwards of 500 properties earlier last year. Of course, inventory is down. We're running probably about half that now, but I think you'll get a lot out of this. So I'll go ahead and get started here with this. There's some of my there's my contact information on the screen. If you have questions, I'd ask that you hold off until the end. I am doing the webinar by myself, so it's kind of hard for me to pay attention to the questions box as well as conduct the webinar. But feel free to email me after the webinar, and there is my email up on the screen, which is jamie.maloney@floridamoves.com. And also, please email me after the webinar, and I will reply back to you with a copy of my accounting for REO Accounting for QuickBooks manual that's part of my billing SOP, and I'll bring that up here on the screen. This is the manual that I had written, and again, it's geared for towards my office, but basically we're going to just go through the flow of funds from when bills come in through coding them, submitting to the banks, creating invoices, processing payments, and then making the deposits into your bank account. That's really just a flow of funds through QuickBooks, and that's what I'm going to take you through today. We'll also discuss how to handle utility company situations, utility deposits, how to handle final utility estimates, how to account for gains and losses on those, credit memos, which are also used in our business as well. But anyways, this is the manual that I wrote. It's pretty detailed, but it is written kind of towards my office. So when I email this to you, just take the information and use it to update your own SOP, or use it to kind of correspond with your office. You'll notice some things in here that you're going to be unique, such as my database. I use Microsoft Outlook Business Contact Manager as my database, so you'll see a lot of references to that. It's a database program that I've used since I've been in the business in 2007, and I'm looking to update that or move that over to REO Genesis at some point here in the near future. But again, you'll see a lot of references to that in here. Also, you'll see some references to how to do payroll and everything. I'm not going to cover that in this webinar, but again, I'm happy to send this over to you, and hopefully it'll benefit you all a lot. I've sent this out to a lot of members and gotten good feedback on it. So these are my accountant references right here. Now, my QuickBooks file, as I go through it, of course, is, has already been set up. Your file is going to be set up however you've set it up if you have one. Last year, I had one of my staff accountant, Beatrix Roms, come into my office, and I paid her on contract to be in the office for about a month with me to help me organize the file, to see all the challenges and problems we go through with as far as accounting for funds, with all the different reimbursements that we process. And at that time, we were processing 500 properties, and it was, it was kind of crazy keeping up with everything. And but feel free to reach out to them if you'd like. They are aware to maybe expect inquiries from NRBA members. If you want maybe a copy of my file, just a setup copy without, just a chart of accounts, things like that, I'm happy to email you my own chart of accounts too. But feel free to reach out to them. Carl Watkins is the owner. That's his office. Beatrix Roms is my personal accountant, and as well helped me write the manual. So there is their information there. As you can see, as I was talking about earlier about all the different clients we work with. We work with about 45, almost 50 different bank clients. So I'm familiar with the billing procedures for just about everybody out there. There's a few banks that we're not working with. I personally work with, about probably 10 or 12 of these banks. The other banks are ones I just handle the billing for the agents. And it works well. Never have any issues with the banks reimbursing me, and it takes the pressure off the agent to manage funds, come up with utility deposits, past due account breakdowns, things of that nature. It's all stuff I and my staff handle for the agents. But if you let's see, we'll go to the next slide here. These clients here, I don't actively work with them. So if you see anything and any questions that may relate to them and you want to know maybe how you should handle it within QuickBooks, feel free to shoot me a message. But I don't actively work with Fannie Mae, Freddie Mac, or Wells Fargo. So this is what we are going to go through in this webinar. Basically just the flow of funds. And we'll start with the accounts payable section, on to bill submission, creating the invoice in the file, receiving the payment back from the bank, and then making the deposit into QuickBooks into your bank account. We'll also cover the utility company situations, as those are kind of a challenging situation as far as tracking your deposits, handling underpayments when they take the final bill out of your check, how to properly account for that. And then also within my manual, there are some how-tos and add-a different things as well. And that's all in my manual. This is pretty simple stuff right here. But again, we'll go ahead and get started with QuickBooks, and I will go into my QuickBooks file as well and take you through how I handle bills. Briefly, real quick before I get started, I have two separate QuickBooks files that I utilize in my office. One is for the reimbursement and the agent referrals. The income coming in from the agents goes into the that account, pays my staff, and that's where all the reimbursements are processed from. I have a separate QuickBooks file for just my regular everyday real estate business, my own sales, expenses, income from sales that are my own. So when I send you, if you email me and ask for my chart of accounts, I will send you two separate chart of accounts. One is my reimbursements, which is the most active one, and then my other general one for just everyday real estate business. So, all right, getting on with the first part of the QuickBooks tutorial here, we're going to talk about the accounts payable section. So when you go into QuickBooks and you bring up the main screen, which you see now, the top section here where it says enter bills and pay bills, this is your accounts payable section. Anything that you enter in here is something that you're going to pay at a later date, tomorrow, 30 days from now, whenever the case may be. So if you click on enter bills, and it'll bring you up a form here. If you enter in this information and then you save it, it's going to then increase your accounts payable, which you'll notice over here on the right, by whatever amount that you've entered this. I, in my office with the reimbursements, do not use the accounts payable section. I immediately will go into writing checks. I've found that a lot of people, when they receive the bills, are going into the accounts payable and entering the bills, and then paying the bills, which is the second step. It's really an unnecessary step. If you enter them and pay them, you can immediately just start writing the checks. So that's why you'll see in this file the accounts payable is 0. So, and also if you want to use accounts payable as a holding tank for maybe bills that you're going to float, so you have a large contractor bill that you $10,000 rehab bill, and you want to enter it into accounts payable because you want to wait and get the money back from the bank before paying the contractor. So if you were to put it in accounts payable, which would indicate that you have a liability to pay this contractor, you would not be able to pay the bill and thus get a check copy for bank submission. So that doesn't work for that, but a lot of people think of that up front, that this is a good way to float the money and then see how much money that I'm liable for the contractors in accounts payable. But again, the caveat to that is you cannot pay the bills until you physically write a check in QuickBooks. So it does not work. So again, in my office, I do not use, with reimbursements, I do not use the accounts payable section. I really don't see any reason to it if you're just going to turn around and pay the bills. Unless you're holding them, I'm not recommending that you use the accounts payable section. So coming into the main screen, over here on the top right here is chart of accounts. What I'm going to mostly be focusing on are my reimbursement chart of accounts, which have been set up by my accountant as work in process accounts that are other current assets are the type. These are going to show up on my balance sheet, and it's just money that it's just pass-through money, as I call it, money in, money out. It's nothing that makes me any money. If anything, I lose money on the reimbursements, as there's always a certain percentage of money that is lost in this business. So, but these are all my chart of accounts. But this is the first thing that if you're setting up a QuickBooks file that you'll need to do is define all these. QuickBooks will come with a standard set, but then you probably would want to work with your accountant on getting it customized to your office. And again, feel free to reach out to my accountants if you'd like to have them put together a file that mirrors mine. But these different items down here, cash for keys, HOA liens, property registration, repairs and maintenance, utilities, and utility deposits are the different billing reimbursement items that I have defined in my office. So those are the ones I'm mostly going to be referring to a lot. So again, coming back over here to the main screen, when you come in here, the first thing I'm going to go to is the write checks section. So the first step in the process is getting a bill, whether it be a utility bill in the mail, a contractor bill, whatever the case may be. You've got a bill and you've got to pay it. So first thing to do is to go and write checks. And I highly recommend that you get a dedicated computer for QuickBooks with a check printer attached to it. That's how I have it in my office. If you're handwriting the checks, it can take you some time to actually do that. The print function within QuickBooks really saves you a lot of time. So you'll notice when I open up QuickBooks, beneath the check, the to be printed box is checked. That means I'm going to enter in 5, 10, 15, whatever amount of bills that I have for the day. And then when I'm done, I'm going to print the batch of checks. If I don't want if I don't want it to save in memory, then I can uncheck that box, and then I can put in the appropriate check number here at the top, and then I could manually write the check if I'd like. But this is just my check register. Within QuickBooks, it's going to track all my checks right here. So also when a bill first comes in within my office, you got utility bills, they come in the mail. Contractors, I of course have them all email me. I don't let them fax bills to me. I do make them email me and not my staff members. Before I will take responsibility for a bill, because I'm handling a number of agents' bills, I want it to come to me so there's no miscommunications. And I always reply back to them that I've received the bills, and I require them to keep some type of documentation showing that I've replied back to them in case of any miscommunication that they said they sent it and I didn't get it. So the bills come in. My system will then take them, and the first step they got to do before they even write the checks is to code the bills. This doesn't involve QuickBooks, but you need to, on each invoice, write on there the date that you received it. We have a stamp that we just change the date of the stamp each day, and we stamp it with the date that it's received. We code it with the bank, the appropriate bank, the loan number, and the assigned agent, and we have a stamp that has each of these different fields on it. And again, the date received, bank, bank loan number, or property ID, whatever number that you need to submit for reimbursement, as well as the agent that is assigned the property. That way, at least with me, I know which appropriate system to go into, which equator account to go into, which ResNet to go into, so on and so forth. I will tell you with Invoice Manager, though, I submit all the bills through my own personal Invoice Manager. The other agents don't keep individual Invoice Manager accounts. Whenever they get a new client, I just email them to add me to the Invoice Manager, and I submit my bills to them. But with Equator expenses, ResNet expenses, I do have to go into their my agent's appropriate account to submit the bills, but not with Invoice Manager. We just have one Invoice Manager. Same with iClear. We just have one iClear account as well. Okay, so before we write the checks, let's go up here and let's take a look here at the vendor center. Whenever you pay somebody, they are a vendor, and QuickBooks is going to track everybody that you've ever paid. So if it's somebody that you've paid before, QuickBooks is going to have a record of it, and you'll see over here on the left all these different vendors that I've paid through the years. One thing I like about this is if when you open up the vendor's information, you can put in as much information about the vendor that you like, as you can see right here. If you're doing cash or keys, one thing I like over here is over here on the additional info, you can put in their tax ID, and then you have a box here that says vendor eligible for 1099. This is a convenient way to track the 1099s that you need to issue if you're issuing the check for the occupant. And so before you write the checks, you'll want to go into your vendor center and add them, or else QuickBooks isn't going to recognize them. And of course, you can just do a quick add, which I'll show you right now over here from the check writing screen. Let's see if I go here and I type in and say TECO, which is our Tampa Electric Company, our major electric provider in the area, it recognizes it, so it's in there. But if I'm writing something to Johnson Power Company, which is something doesn't exist, it's never seen it, it's trying to find in the list, it's not there. It then comes up and it says name not found. What do you want to do? You can then do a quick add, and you can just tell them it's a vendor and say okay, and then it goes in there, and then you can go back into your vendor center at a later date and define them any further as far as phone numbers, address, any other pertinent information. It's really not that critical that you go in and have all of the different contact information. As long as you have it in some other database, it doesn't necessarily have to also be in QuickBooks. But that's the first thing that you need to be aware of, though, is the vendor center. So now this one here, I'm going to go back and do work with some accounts that I'm familiar with here. Let's say I'm writing a check to TECO, as I've said. As you can see, it's found it in my list, and it notes that it's defined as a vendor. And I'm going to make sure my to be printed box is checked, because let's say I have a number of bills that I'm going to write. So paid to the order of TECO, and in the amount of whatever the case may be, it's going to then fill in the amount instead of handwriting it. In the memo, I'm going to put the partial address and then what the bill is. So if this is for 213 West Hilda Street, and then let's say electric, which I just abbreviate ELEC, and then the dates of service, so 03/01/12, which is just March 1st, 2012 to 03/31/12. So that way I know what check this is covering, and then I'm going to copy and paste the memo down to the check register line 1. So that's in there. Now, the accounts are this is where, going back to my chart of accounts, these are my work in process accounts. Remember, the reimbursement items are one of 7 different categories that I have defined in my office. And let's go over here to this PowerPoint. You'll see here on my PowerPoint, I've got different bill categories. I have utility bills, I have utility deposit bills, HOA bills, lien bills, property registration, cash for keys, and contractor bills. I don't get any more specific than that. You can get as specific as you like. With regard to contractor bills, for instance, I don't get specific like rekey or trash out, anything like that. It's just a contractor bill that comes in. I don't need it to be any more specific than that. But if you want more items to track different reimbursable items, that's up to you. So when I write a check that's a reimbursable item, my item within QuickBooks, which will then show up on my balance sheet as a other current asset when this is completed, is going to be one of those 7 categories. And with a utility bill, I'm going to select utilities paid. When we get over to the invoice section, I'm going to use a different account item, which is going to be the opposite, utilities reimbursement. So it's either utilities, the paid category when I'm writing the check, and it's going to be the reimbursement item when I go over and I create the invoice, which shows that the money is owed to me. When I write this check in QuickBooks, this is not tied to my customer center. It's not in my receivables that this is money that's owed to me. This is just money I've spent. After I submit this to the bank, we're going to go into the invoicing step, which will then record it as a receivable, and that's when I'm going to then use the utilities reimbursement. So what this does with my file is on my balance sheet I have categories for utility paid and utilities reimbursement. When I write this check for utilities paid, it's going to show up on my balance sheet as a credit. It's going to increase it. And then when I do the utilities reimbursement on the invoice side, it's going to then debit or decrease the amount of the item. So it creates a wash account. So let's say I write this check for $23.63, and I go to my balance sheet. It's going to then say utilities paid is increased by $23.63. If I use the same item when I do the invoice, it's then going to debit the account by the same amount. So it would show up as a negative $23.63, which would then create a wash. So that money just passes through, so it's properly recorded in my books. I've created a separate line item for utilities reimbursement. So what ends up happening on my balance sheet is I have $23.63, and then underneath of it, I have a separate item that says negative $23.63. Why we did that in the beginning, I'm not really certain, but it's something I'm going to fix in the past so that my items are always just utilities paid, whether it's in the check writing step or the invoicing step. So I know it's a bit confusing, but I'll get more into that here when we get over to the invoicing as well. But when I'm writing the check, I'm going to then select my category and then the paid item right there. The amount copies down from the check, and then the memo is copied to the check register. Customer job. Now this is where we need to go to the customer center and make sure the property address has been defined in my customer center. Over here, these are all my clients. So, and I have them set up as the customers are the different banks. Okay, so you'll see here, and they've all been categorized. And then each address is then added as a job for that customer. So for instance, 24 Asset Management, if I get a new property from them, I right-click on them and I go to Add Job. And then I can type in whatever address it is and say OK, and then it's going to add another property in this list. It will not put them in numerical order, so you did need to go to single user mode within QuickBooks to move these addresses around, or else it's not going to stay in order. To go to single user mode, and what single user mode is, just means that only one person can be in the file at that time. My version of QuickBooks, which is 2011 Premier, I can have up to 5 users, I think it is, in my file at any one time. One person could be writing checks, another person could be doing the invoices. But if I'm going to do certain things within QuickBooks, it's going to require that everybody gets out of it and that it switches to single user mode. And moving items around on a list is one of the things that you need to be in single user mode for. So to switch to single user mode, all you do is go up to File at the top, and you'll see a drop down that says Switch to single user mode. And QuickBooks makes some changes. And you can see it will now tell me that I can use this in single user mode. And now I'm able to do things that I was not able to do before, such as move items around on a list to keep them in numerical order. To switch back to multi-user mode, just go to File and switch to multi-user mode. and it'll make the changes to the database, and it'll now let multiple people inside the file. So the customer center, again, all the banks are set up as customers. So if I had a new customer, new bank that's come in, for instance, it's not one I've been working with before, I can just go up here and add new customer, or I can add a job as well. And as you can see right here, we've had a number of different properties through the years. So, but when you go to write the check, which is let's go back over to here, and see, I wiped that out when I went to single user mode, so let's go back and redo what I was doing. The customer job is then going to be the address right here. So I type in 213, and it recognizes that I have a property under BB&T Bank, 213 West Hilda Street. So that's my customer job. In my class, I have my classes set up for the reimbursable items as the bank. So BB&T Bank. And then on my balance sheet, you'll see different classes, and you'll see gains and losses. So it just tracks the amount of money I would have lost by each particular bank by doing it this way. You can set up classes however you like if you want to have them by each individual address, but then your balance sheet would have a lot of different line items. So I can easily just see which banks am I losing the most money from versus individual property addresses. So I think the bank is the appropriate way to define my classes. And again, you get all this stuff up here from list. Up here you can add things to your chart of accounts, your item list, class list. This is where all this stuff is defined from at the top. Okay, so then this item is all in here, and then down at the bottom you can click Save and New, which will then bring you up another check. So as you can see, the to be printed box is still checked. So I've not actually recorded this in QuickBooks yet under a defined check number. So now let's say let's have a situation where I have a late fee on a bill. Let's say Hillsborough County Water, which is under control by the Board of County Commissioners. That's what the BOCC comes from. And I have a $30 bill right here. And let's say $5 of it is a late fee that is not reimbursable. So 213 West Hilda, and let's say it's water. I then copy and paste this down to the memo. My account is still utilities paid, and my customer job is still 213, which is 213 under BB&T Bank, class BB&T. All right, but let's say that 5 of this, like I was saying, is a late fee. So I put 5. First, I need to adjust this amount here to 25, and then because the check is written for 30, so if the amount in the register doesn't add up to the check amount, it will give me an error. Right here, let's say 5 of it was a late fee. So late fee not reimbursable. Now for my account, I'm going to then, actually in this one, I call late fees in the office bank fees. And what this is you can see it's an expense account. So I'm immediately expensing this, which will show up on my income statement as a loss. It's immediately expensed, and it's accounted for at the time of occurrence as opposed to accounting for it at a future date. So $5 late fee not reimbursable, whatever you want to put in the memo. It's not linked to any specific job. And then my class for any office expenses write-offs are just office general. So as you can see here, now I've written a $30 check, and 25 of it is reimbursable. 5 of it has been expensed as a second line item as a bank fee, and then save and new. Now let's say I have a contractor bill. Let's say Precision Building and Design, and it's a $150 rekey. Again, 213 West Hilda Street. With contractor bills, I just put the contractor's name and their invoice number. So Precision Building and Design, I just abbreviate this PBD INV 2200, for instance. All right. Copy and paste that down to the memo. And my account is now repairs and maintenance. And I have, within the vendor center, you can, and how it knows to go down to the repairs and maintenance paid categories, I've defined these accounts within my vendor center. So when you do the quick adds, it doesn't do that. But if you go back into the vendor center and go to the account settings, you can tell these what to auto-populate automatically for you. So it knows that Precision Building and Design is a contractor and to go into my repairs and maintenance paid category. The amount comes down from up top. Customer job, type in that, and then the class, the bank, and then save and new. All right, now let's say I'm done writing checks. As you can see, it's still in the to print category. When I go up here to print, I can either print an individual check if I want to just write one check right now and immediately print it, or I'm going to print batch, which is the batch of checks. And it's got a number of things in here since I've done this class a few times. These are items because this is a practice file, so these ones here that are dated June 22nd are the ones I've just put in here. If I was maintaining this file, these other items would have been cleared out because I would have manually or would have had already printed these. But because I haven't actually printed them, because I don't have this computer set up to a check printer, they're staying in the system. But these three down here are the ones I've just entered, and they total up to $203.63. And it says first check number. This is where you look into your check printer and make sure that you've got the appropriate check number showing first. And then you say OK, and then it's going to look for the printer, and then you say print, and then it's going to print off all the checks, and it does so pretty quickly depending on your printer. And within my office, because we print so many checks, I have a stamp for my name. My assistant stamps each of the checks with my signature, and then we run them through the check copier to make the check copy image. And then, of course, stuff your envelopes, send out the bills to the appropriate vendors. And you then take the check stubs and then match it to the check copy that is in that you ran off in your printer, and then you're ready to go on to the reimbursement step. So that's the first part of the process here, writing the check. So the main things you want to take out of this whole section here, the ability to print checks by using the to be printed box and printing the batch, the different accounts, different ways I classify the bills, and the applying them to the appropriate jobs and defining the classes as the banks. So, but before I move on, let me talk about utility deposits within this section. So as we know, utility deposits are not reimbursable items, and you don't want to put them in your customer center as money under a specific bank, because then your books aren't accurate. You're showing additional money due from that customer, that bank, because you've recorded your utility deposit under that property address. So what I have done within my customer center is I have went through and I've set up all the different utility companies in the area as customers. So down at the bottom, you'll see utility companies, and then I've got them subcategorized by gas, power, and water, and then the appropriate utility company. That way, when I have a utility deposit, I can then record the utility amount against that utility company. So I'm showing on my books that, for instance, in this one, City of Lakeland owes me $385, $205 from this property, and $180 from that property. So I've recorded these against the utility company and not the bank. So within my QuickBook file, again, utility companies are set up as individual customers of mine. When I write the check, and again, instead of the bank being the customer, the utility company is the customer. And for properties that have utility deposits, I add the job to the utility provider, just like the bank does. This creates one little caveat within QuickBooks that you need to pay attention to, and that is I've got the same property address in here twice. So when I go to my job list and I type in a property that has two addresses, it's going to find it twice. It's going to find it under the bank, and it's going to find it under the utility company. So you always want to make sure that you're paying attention, that you select the appropriate location. For instance, let's take a look at this 1020 Pisgah. So when I come over here, let's say I'm writing a check to 1020 Pisgah. As you'll see, it sees 1020 Pisgah under iServe as the bank, and it also sees it as a City of Lakeland Electric and Water Company underneath the power companies. So if I'm writing a utility deposit check, I'm going to check this one, the one under the utility company. If I'm writing just a regular utility bill, contractor bill, then I'm going to select the one under the bank. And the same step comes up in the invoicing section as well. So that's the only caveat to doing this is sometimes if your staff isn't paying attention, they may select, you know, this one here when it's a utility deposit. It just messes up your numbers in your books. But it works well other than just that one small little bookkeeping glitch that can develop. So with 1020 Pisco, let me say I'm writing a water utility deposit check to them. Again, the property address, and then I'm just going to say water deposit in this situation. Now, down here, it thinks that it's utilities paid because it recognizes this as being a utility provider, but I can't define all the utility companies separately as when they have their deposits. So in here, I would go down to and select utility deposit paid. That line item shouldn't be there. And that way, it's properly records in my books as money that I wrote to the utility company, and then the class for utility deposits is just utility deposit. I don't track the different utility companies for the gains and losses on the utility deposits. I just track them all together. So, and again, save and new. Always be sure when you're done writing checks that the last one that you write that you go down to and either save and new or save and close it. A common mistake that a lot of people do is they're writing checks, and if they're printing them one at a time or handwriting them, they'll go in, they'll put in the last check. They got it all ready. They've went to the print section, all that. Then let's say they're just printing them one by one. They forget to go down here and save and new. So even though you've printed check, you haven't recorded it in QuickBooks. So always pay attention that at the end that you've hit the save and close or save and new button, so it records in your check register as well. So that is that step. We've then printed off the checks, we've made copies of them, and now we're ready to submit for reimbursement. At this point, let's go back over here to my PowerPoint. The coding the bills. This is the section where I talked about when the bills come in, what goes on each of the bills. And this is what we just went through, preparing the checks and copying them and printing them out. Non-reimbursable payments, we covered that with like bank fees, late fees, or if maybe an invoice manager fee. I have different expense categories set up within the check register for non-reimbursable payments. Those are things that you obviously are not submitting for reimbursement. So at this point, though, in my office, we take the checks and we put them in different folders to be submitted to the bank for reimbursement. Now, you can go into QuickBooks at this point and do the invoice step and thus get your invoice number. And there is a way to, when you write your checks, also within certain versions of QuickBooks, have it immediately create an invoice so you can save this additional step. I've not perfected it yet, so this is the way we're still doing it in our office. Write the check, submit for reimbursement, then create the invoice in QuickBooks. But there is a way, though, to write a check and have it invoice at the same time. And I've played around with it a little bit, but it's not working exactly how I'd like it to work just yet. But I've had some people ask me that. And so you can go into QuickBooks and create the invoice right now, and thus get an invoice number, and then do the bill submission step to the bank. I like to do the bill submission step and then go in and create the invoice in QuickBooks, just because with the large volume of properties that we were carrying, it's not so bad now, but I wanted to get the bill submitted to the bank as soon as possible. I can submit invoices in QuickBooks 2 days from now, 5 days, a week from now. It's really not that critical that I get them in QuickBooks as invoices, as soon as possible. But it is critical that I get the bills submitted to the bank as soon as possible. So at this point, I'm not going to go into the different ways to submit bills, things like that, as we're not covering that right here. But a few things I will mention about this step is get yourself a good desktop scanner. I use a Fujitsu ScanSnap S1500. Again, that's a Fujitsu ScanSnap S1500. It's about a $400 scanner, but it really cuts down scanning times versus using an all-in-one Plus the scanner does duplex scanning, color scanning, and the clarity of it is so much better than the all-in-ones, and the speed of it is really worth the investment. So highly recommend that you get yourself a good desktop scanner. Also at this point, you'll see here on the PowerPoint there, refer to billing SOP for a specific procedure and portals for bill submission. I have a 3-ring binder with that I call my billing SOP that has the manual that I will email out to you, along with portal instructions, how to use Invoice Manager, how to use iClear, how to use Equator Expense, Pyramid Expense, Resident Expense, all the different expense portals that are out there. And also then I have the different banks and their current billing procedures as well. And of course, when they send us out an email with changes to their billing procedures, just print out the email and put it in the banks section in my billing SOP. That way you can always easily refer to that if you need to know if you got 20 days for final bills, 30 days for final bills, whatever the case may be. Do you need a cover sheet? Do you not need a cover sheet? And when you're working with almost 50 different banks, you sometimes draw blanks on some of the smaller ones as to what do I do with this one now. So I highly recommend that you keep yourself a billing SOP, and you're going to use this manual as an addition to that as well. So anyways, you take your check copies, your check stubs and your copy of your checks that you've just submitted or that you've just processed and written the checks for, submitted them to the bank. I have a stamp in my office that says submitted. It's red, and I stamp the invoice with the stamp. That's where it says submitted on the PowerPoint. And then I place it in the invoice tray for my assistant to then create invoices within QuickBooks. And this is the part where I'm actually going to then show on my books that the bank owes me money. The first step that we did, writing checks, there's no record that anybody owes me any money. I was just writing checks. So the next step is where I'm going to create my receivables, and that is the next part here. So going back over to QuickBooks, closing out the check writing section. From the main screen, you can either go here, and depending on how you have your file set up, you can set up these home screens differently. The invoices, or it's also up here under customers, and create invoices. All right. Now it brings up another template similar to the check writing template, and it's pretty much just mirrors a lot of what we just did in the check writing screen. To start with, customer job in the upper left-hand corner, I'm going to start off with just say 213 Hilda, and it recognizes that. The class, again, is always just my bank. Now, let's say I'm invoicing for a utility bill, all right? Instead of utilities paid, I use utilities reimbursement. So that's what I was talking about when I was first going over the check writing. If I use utilities paid again, it's going to debit as opposed to credit the amount on my balance sheet. So when I increase something by $23, it's going to then decrease it by $23 when I create an invoice. Because I use a completely separate item, it creates two separate line items, one being positive and one being negative, and in a perfect 100% recovery of my reimbursements, the two should zero out. So, but again, I'm going to change that here in the future, but for right now, I have a separate line item for utility reimbursement, which would then just debit the amount on my balance sheet as opposed to just debiting it from the other line item and creating a wash account. So I have two separate line items, one with a high positive, one with a high negative amount that should zero out if everything was reimbursed as agreed. Utility description here, the description right here, power bill, or as I was saying, just like I did before in the check, 213 Hilda, 030112 to 033112. And I copy this description down to the memo down here on this template. Class, the bank, and then the amount, whatever it was that I wrote the check for, $23.63 I think it was, right there. And then down at the bottom, save anew. And then now when I go over here to my customer center and I go over here to BB&T Bank, give me a second, sometimes these things can be a little bit hard to find so I have so many properties. It does have a search function up here, but with my file it takes a while to actually find some of these properties. It's not very quick. You'd think it would be. But as you can see over here on the left, it shows that I'm owed $123.63. In the main section of the screen here are all the different payments that I've recorded and all the different invoices I've recorded. This is where the job comes into play when I'm writing the checks and when I'm creating the invoices. When I go up here to the top right and I just click Open Balance, it's going to then tell me the amount of stuff that hasn't actually been paid back. Whenever it's been received, all this other stuff, a lot of it here has been received, but I've just recorded an invoice for $23.63. So if I open it up, it immediately takes me over to the invoice category and shows me, what I had just done. So now I know that I have a record of that. And also from the home screen, my accounts receivable is then increased by the $23.63 versus where it was before. As you can see right here, my accounts receivable, as of when I did this copy of the file, was $42,000. So right now I know that I have $42,000 floating around out there that I am owed. Actually, right now that amount is very low. This year at this time, I was about the highest I've ever seen is about 200,000. 40,000 is pretty low. So as you can see, we're pretty slow as far as receiving referrals and new properties as well. That's definitely being reflected right here. But again, going over to the invoice section again, customers and create invoices. Now, up here, you can print these invoice cover sheets like you do with a check. I don't print invoice cover sheets. I think it's just a waste of paper. But down here in the bottom left, you'll see the box to be printed. It works just like a check. If I'm going to put in 10 invoices and I want to print off 10 invoice cover sheets, I can do that, or I can print them manually. I don't print them at all. I just staple my check copy and invoice together, and I keep the hard copy there. I don't see any reason to put an invoice cover sheet on it. It will record your invoice number, which is up here in the upper right. And this one, it's 12057. I just hand write that on the invoice along with the other items that have been coded to the bill. And then we put them in what we call the cubby holes, which is just a cabinet system, a bunch of different little rectangular boxes that are specific to the bank. So when the checks come back from the bank, we can match them up with the actual hard copy of the bills, and then go into QuickBooks and receive payments, which is what we're going to go on to now. So invoice step, very simple. This is the point at which you are recording the receivable and telling QuickBooks that the money is owed. Going over here again to the Customer Center, you can see all the different checks and invoices that we've written. This is why we do the job category. Open balance up here will then filter out all the stuff that has been paid and shows the remaining amounts right there. Okay. All right, so we covered that right there, different amounts. Okay. All right, so the next step in the flow of funds is now to receive the money back from the bank. So the check processing step. So when the checks arrive in the mail in our office, we make 2 copies of each of the checks. Stack 1 is going to be used to match to the open invoice, and this is where we go to the cubby holes where I've taken the files that I've created the invoices for and match them with my check copy. And then stack number 2 is going to be used as the backup for the deposit. So when your checks come in, you rip off the actual check itself, stamp the back with your stamp, and then get your deposit slip out, write out your deposit slip, send the money to the bank, and do that immediately. Make a copy of your deposit slip, and then you're going to put that copy of your deposit slip on top of all the different check copy stubs. That is the backup for with the check copy stubs along with the full check copy. That way you got the stub and the actual copy, because the bottom part of it or whatever has been ripped off and sent to the bank. That way you have the full amount for your deposit. That goes into a separate file in my office for just bank deposits. I then have the second step, which is specific to the bank. The check, the deposit that goes to the bank could have checks from 24, iServe, Bank of America. So when I'm maybe doing some research on past due Bank of America checks, I don't want to be flipping through all these different checks from all these different banks in my utility deposit or in my deposit drawer. So that's why I create a second check copy stack. So I match it to the invoice that's in the cubby files, cubby bins, and I can go into my folders that are specific to that bank and then flip through and see the check copies. So if I'm just researching a specific bank. So you take the stack that is that you're going to match to the invoices. So let's say you have a check, the 213 Hilda property, and the 2363 has come back. So you take the check copy that says 2363, you come over to the cubby bin, you pull out the invoice that you've just created the invoice for, and you staple the check to the invoice, and then you're going to go over to QuickBooks and you're going to receive the payment now in QuickBooks. So again, the check copy, match it to the hard copy that's in the cubby bin, and then you take it to QuickBooks, and now you're going to physically receive payments in QuickBooks. So going back over to here, the next step here, and let's just go from the home screen, customers, I'm going to receive payments from my customers. All right. All right, so at the top here, received from, and in my office, we're just going to, we of course define the files as by the address. 213 Hilda, received from, this is a bill that I'm receiving payment back for this particular property. Now, right here, it brings up what's currently outstanding on this property. So this is a nice natural QC point within QuickBooks that, let's say I'm receiving some payments back from the bank. Let's say I have a whole lot of stuff out. So let's say I have like 8 or 9 things here, and I'm getting paid on these, last, 7 or 8. But back here, I've got one that's been dated 4 months ago that's not getting paid back. So I know I've got a problem with this one. So let's say, for instance, on this one, I've got my 2363 back, and I got to put in the amount first. I've received the check for 2363, and it tries to match up the amount to an open item. If this was for $5,322 and I had a bunch of invoices down here, it's going to try to find for you a $5,300, so many cent total. It works well when things are coming in as you're sending them out, but when they start missing payments on certain things, it can be a little bit confusing. But again, within QuickBooks, right here, I'm looking here, I immediately see, well, why haven't I get this $23 check, but why don't I have this $100 back? So I know to follow up on this one right here without actually doing anything other than just my normal day-to-day routine. All right, memo, I just put the address right here. All right. And then the check number is the number from the bank. So it's 5696 is their check number, whatever the BB&T check number is. As you can see, it's matched up here to this $23.63, and then save and new. Now, when I close this out and I go back over here to my customer center under BB&T Bank, as you can see, I had $123 outstanding. Now it's only showing that $100. When I go up here to open balance, that $23 isn't being showed as money that's owed to me anymore. So I've recorded that, and my accounts receivable would have went down by that amount because I've received the payment. So now going back over here again to the receiving payment section. So this is where you take that stack of check copies that have been matched up with all the different invoices, and you just start flipping through them. I got this one done, flip the second page. Okay, here's a check back from 1020 Pisgah. All right, and I have a $47.75. That one came back. Of course, this is actually a situation where I had an underpayment, so I actually owed $1.28. That's why I brought up the error message. So, but it's the same process with each check. You record what you get against the specific property that you get, and we're going to get into the credit memos and underpayments, overpayments, and all that stuff that come up here when I get through the flow of funds. All right, and then save and new, and then you can go on and on until you finish your stack. And at this point, this is a mistake I made when I first started doing this. I thought I was done. I thought, okay, I'm done. I've shown that I'm not owed anything from the bank. I'm doing a great job. And my accountants come in. They say, well, I see all the checks you've written, but we don't see any deposits you're making. So, well, I'm putting them in, but I'm not telling QuickBooks that I'm making the deposit. This isn't crediting my bank account. This is only debiting my accounts receivable section when I'm receiving payments. So I've got to now complete the flow of funds, which is to then make the deposits. And that's the final step over here with in here, make the deposit. Then let's see, matching checks, receive payments in QuickBooks, and again you'll see the different line items and item categories that I'll send you afterwards. And now we're going to make the deposit. So within QuickBooks, from the home screen, a couple different places to get that. Over here on the right, record deposits, or up here under banking, we can make deposits. And if you look here on the home screen here, you see that it's the flow of funds is these arrows right here. From entering the bills, you pay the bills. And then from you enter the bills, the line goes down here to create invoices. You then receive the payments, and the final step is to record your deposits. So now if I click on record deposits, it's going to recognize that I've been receiving payments. So the ones that I've done today, it sees that I have received at $23.63 and $1.28. So if this was all that I was receiving for that day, I then need to look at my deposit slip and make sure that it totals $24.91. This is that other check copy stack. And then I'm going to say OK, and it's going to pull up its version of a deposit slip. And as you can see, it auto-populates everything, so you don't have to actually select anything on this one. It's being told in here in the upper left, deposit to. It's being told to go to my EverBank account. The date here, you need to make sure that the date is the date that actually hits your bank. If you do a deposit today, but you don't get around to actually doing the deposit in QuickBooks till next Thursday, it's going to put in next Thursday's dates. Then when you do your reconciliations, you're not going to have accurate dates, and it'll be a little confusing. So always modify your date to the actual date that it went into the bank. Memo, whatever you want it to say, it's just set to say deposit in my file. And then down here, the different amounts are all auto-populated, and you don't need to worry about class should have auto-populated, but it did, so I put that in there. And then this one here, I serve. So it's because I didn't complete all those within the section. And then the check number, whatever the case may have been, for when if I had completed the payment receive step thoroughly. And then cash back goes to, if you want to do any cash out, memo, cash back amount. Down here in the bottom right, deposit total $24.91. And then I'm going to click Save and New. And it recognizes I still have money in there that I've not deposited. That's why I brought up that box. But now my EverBank account will then increase by the $24.91. So the flow of funds is then completed at this point. So within my PowerPoint, as you can see, we've now completed the full flow of funds. So it's a lot of information to absorb, but it's really, in my opinion, common sense and simple once you've done it a few times. You know, you write the check, you invoice, you receive payment, you make the deposit. Once your QuickBooks file is set up to do this, it's just a matter of data entry, really. The tricky stuff comes when you're, monitoring open invoices, receiving underpayments, things like that. So we'll get into some different items right now that are common to our business. For instance, utility company situations. Again, we've already covered this first part. We invoice them against the utility company, not the bank. And each utility company is a customer, which each property with a utility deposit being defined as a job. The payment, my item is utility deposit paid. The job is the specific address under the utility company, dot the bank, and then my class is the utility deposit. Same thing for the invoicing, except the only difference is my item is the reimbursable category, not the payable category. All right, so now let's go into a few different situations that come up. So first one is utility bill comes back and they've taken the final bill out of the check. Okay, so let's go over here and find an example here. All right, this is a water bill, under City of Pinellas Park for $100. So I have $100 that the City of Pinellas Park owes me for this particular property. And let's say this property is closed and they're sending me the my check in the mail, but they've taken the final bill out of the check. All right. So the first thing you got to do is we got to come up and we got to receive payments. So I've received money. I've got to receive payments. So customers receive payments. Now type in 5295, and as you can see again, this is where you need to pay attention. Am I receiving it from the bank under Atlas? No, I'm receiving it from the City of Pinellas Park. So because I have this address in here twice, I've got to select it under the water company. So 5295, memo refund of utility deposit, check number, whatever the case may be. And that was as you can see, they owe me $100. But let's say they've only sent me, $40 back, and because the final bill was $60. All right. It recognizes down here that this is an underpayment in the bottom left. Underpayment, $60. When I finish, what do I want to do? I don't want to write off the extra amount because I'm not losing any money in this situation. I'm going to send the $60 invoice to the bank and through the invoicing step specific to that bank. So in this situation, I'm going to leave this as an underpayment. I've received $40, save anew. I could then go up to banking, make the deposit, and it sees that I've received $40, and the step that we just went through, save anew, it's in the bank. Okay. Now going back over here to the customer center, it still shows me that I'm owed $60 from the City of Pinellas Park on this particular property. But that's inaccurate. I'm not getting $60 more back from the City of Pinellas Park. This $60 is going to be invoiced to the bank as a final bill. Real quick, I don't know how everybody else does it in their office, but with us, with bills that are taken out of the final amount, because the banks always want a check copy, we have a separate check register that we handwrite checks for the amount of the amount to be refunded to us. We call them dummy checks. We don't actually send them anywhere. We just use them to submit for reimbursement because, as you know, the banks want to see some type of proof of payment, and when you send them, or some of them, when you send them just the statement showing that the money's been taken out of the deposit, they still want a proof of payment. So in our office, we've got a check register where we handwrite the checks. We attach it to the breakdown of the final bill, and then we submit that for reimbursement, invoice, and then receive the payment back from the bank. But I've got to get this $60 from the utility company off my books. So this is where I use credit memos. So from the main screen, customers, and create credit memos or refunds. So it looks like an invoice template, and credit memos and invoices actually are inverse of one another. I'm going to give money back to a customer as opposed to telling the QuickBooks that this customer owes me money, which is what an invoice does. So 5295, and again, City of Pinellas Park, utility deposit is my class. My item, utility deposit, reimbursement. Credit memo, you can put in what you want. Final bill was an out of check, difference billed to bank, and $60. So copy and paste my memo down from my description. Save and new. Okay, then it brings you up a box and it asks me what I want to do with this credit memo. I can retain it as available credit, which is not what I'm doing in this situation. I could give it as a refund again, which is not what I'm doing. I'm going to apply it to an invoice because remember, because I under-received an amount, I'm showing that I'm still owed money from that utility company. So I'm going to apply this to an invoice. And again, this is where I go back to credit memos are opposite of one another with invoices. Say OK. It recognizes that I have an amount due of $60 in this box right here, and it's already been checked. So I say done, and the credit memo has been applied. I could print out this credit memo and put it in a file along with that copy of the underpayment from the utility copies, for the utility check if you'd like. I don't do anything more with it than that. All you'll see now is when I come over here to my customer center and I go down to the utility companies. $5295 now shows a zero balance. So now it's been properly recorded in QuickBooks. I'm not showing that I'm owed anything on this property, and it is at a 0. So that's when you use credit memos, is when you're basically giving a refund to a specific property because the money's not coming back. You also use credit memos to write off losses on properties. Let's say this $43, and let's see if it's just one thing. Let's find one with just one thing. Okay, let's go here. Let's say this $48.94 is not coming back for whatever reason. Let's say maybe a final bill that I've submitted too late, whatever the case may be. I didn't submit it properly in time, whatever. All right, so now I need to get off my books because I'm showing on my balance sheet that this is an asset to me, that it's money owed to me when I know in reality that it's not. So again, customers create credit memos. Let me write this down so I don't forget which property I'm dealing with. And 4210, and because the cursor was on it, it was defaulting to that anyways, but again, you just type in the address right there. The class is going to be the bank. Now the item here, because I'm doing a credit memo and it's money loss, I'm not going to use one of my payable or my reimbursable categories. I'm going to tell it that this is money that is now going to be an expense of mine. So I have a category for write-off and losses. So I select that, and then in the description you can say, bill submitted late, not reimbursable, whatever. And you want to be specific, so in case you're ever subject to an audit or whatever. And then the amount $48.94, save and new. It's giving me an error for some reason on this one. And also another thing before I figure out why it's giving me an error, let's say you work with multiple agents and you want to, instead of writing it off and it's a mistake of an agent, they didn't give you a bill or something or didn't get you something in time, I have due from accounts set up, and then this will then, as a separate item on my balance sheet, will be a receivables account showing that the agents owe me this money. So let me close this one out. So this, let's say 9811 on this particular one. 4515, customers create credit memos. Let's go to 6,000. Let me do this 6,006. Hold on a second, I gotta find out how much that was again. Okay, so now 12918 Fenway, and I keep forgetting the addresses, so I gotta write these things down. 14736. Let's say that this money is not coming back to me. So I go up here to customers, create credit memos, 12918, and let's say it's due from a specific agent. Money not reimbursed. Agent didn't provide documents, something that I needed to submit for reimbursement. So, and then the amount 147.36. This is then going to move this to the due from Christina Griffin account. So it's going to now show that she owes me as opposed to the bank owing me. And then the class still goes up under the bank in this situation. And then I'm going to, again, apply it to an invoice. It applies to those 3 invoices right there, which total up the entire amount. And I say done, and then that goes away. So now I'm not showed that I'm owed anything on that particular property anymore. But if I go up here, and I've got a shortcut to it up here, if I go to what Christina owes me, the amount then goes onto her balance sheet or to her accounts receivable page as money that she owes me. And again, within my office, I assume all the losses pretty much for any bills that are not reimbursed. So but I do like to keep track of it. At the end of the year, I'll do a journal entry where I'll move the money that says due from specific agents, and I will then move it as a write-off and loss to me. So that's just part of the 25% referral fees that I'm taking from the agents. So again, that's what credit memos are used. You use credit memos to you use them to give a credit back to a customer. With utility companies, it's to commonly because you've received less than the full amount of utility deposit and you need to get the additional amount off, and you also use them to zero out money that's not going to be reimbursed to the bank, and you can either expense it at that point, and that's where your item becomes your write-off and losses, or you're due from your agent accounts if you want to show it as a receivable that somebody else now owes you the money because they made the mistake, and you should receive the monies back from them if you have agents. Okay, so going back over here to the PowerPoint. Now, handling utility estimates. Let's say it's a situation like GMAC with the outsourcers where you have 5 days to submit final utility bills. Well, we all know final utility bills come anywhere from 5 days to 45, 60 days later sometimes. So we have to do a utility estimate, and obviously our utility estimate is not going to match what it is we actually receive back from the utility company. So the first step when you're doing utility estimates, you create the estimate, you submit it for reimbursement, and you receive the payment. No different than it had been an actual bill. So if you're doing a $60 final utility estimate for electric bill, create the estimate, submit for reimbursement, receive the payment back from the bank, make your deposit. That part is done. A month later down the road, the bill comes in, and you've now either overestimated or you've underestimated. So you either have a write-off and loss or you have a gain in this situation. And so this is where you need to apply one of these procedures here, either the underestimated or the overestimated procedure. And it's really simple. All you need to do, but the first step needs to be completed. You need to actually have received payment and made a deposit back. So if you get the if you haven't gotten the money back from the bank yet, you need to hold the final utility bill that comes in. Go ahead and pay it to the utility provider, but the step in QuickBooks works easiest when you do it this way. So you go into the invoice and you're just going to adjust it to what it actually was. So let's go in here. Now these are open invoices over here. So let's go over here to something that's actually been received. So I'm not going to go in, like I said, these here have not been received back from the bank, the amounts that are showing open. I'm going to go into an amount that's actually come back from the bank. Okay, so this shows a zero balance. So any of these invoices I can do this step on. So let's say that this water bill was actually a final bill, and I estimated it as $25. So let's say the final bill comes in and it's $35. So I've lost $10 here, but I got my $25 back here, but this $10 is gone. So I'm going to then change this to say $35, and down here on my second line item, I'm going to do a write-off and loss for under estimated final bill. And then I put in a 10, and because it needs to stay at 25, it recognizes to put this as a negative 10, so 35 plus a negative 10 then gives me 25. I then save a new and apply it differently. So now I have properly taken my write-off and loss for the $10, and I've adjusted the invoice appropriately. If it's a situation where it's a gain, let's say I overestimated and I've got money back. Let's go in here to this situation here, $125, and it doesn't matter what category it is. If we're just going through how to adjust invoices. Let's say I estimated $125 for our final bills, and it came in and it was final bills were $100, so I made a $100 or $25 gain. I changed this to $100, and then down here I'm going to put, I have a category for miscellaneous income, gain. Overestimated final utility bill, and I need to make the total still add up to 125, or else my deposit and all that stuff gets screwed up. So put that in there. Now we'll record this on my income statement as miscellaneous income. Save anew. Payments are applied differently. Invoice. That's all fine. So that's how you handle situations where you're dealing with utility estimates. You can either record your gain and loss, or you can record your income appropriately, and all you're doing is you're going into the invoice. The invoice needs to have already been paid, and then you're going to adjust it to what it should have been, and then your second line item is either your gain and loss or your income, whatever the case may be. All right, so let's go back over here. I'm just about to the end of this. And that right there, final utility estimates, that's how we do that right there. So credit memos, that's what we've been talking about. When are they used? Again, receiving payments for utility deposits when the final bill was taken out of the original utility deposit, and when the bank client does not fully reimburse for the receivable created. And right here, I've got credit memos are similar to the invoice template, but recording a credit memo results in a debit to your receivables versus a credit increase to your receivables when recording an invoice. So again, credit memos and invoices are inverse of one another. So going back over here, let me bring this up to my customer center. All these amounts are mostly positive, some negative stuff, but this is all money that's owed to me. So every time I go over and I create an invoice for whatever property I apply it to, it increases by this amount. This is money owed to me. But if it's a situation where it's a negative amount, I'm not going to then create a invoice to zero this out. I'm going to use an invoice to zero this out, because then that's going to make that more positive than negative. So those, again, if you have an overpayment, let's say you get paid twice on a utility bill, and you want to apply the amount as a gain, you then would use an invoice and not a credit memo to zero it out. So for instance, let's do an example on 4023 Paris. Let's go up here and let's receive a payment on this property for something we shouldn't have received for, whatever the case may be. Okay, it recognizes I'm not owed anything on this particular property. It says overpayment 100. When you finish, what do you want to do? Leave the credit to be used later, refund the amount to a customer, whatever you want to do. But we're going to leave the credit to be used later. Overpayment, check number. Get that down. Okay. Okay, so now you notice over here, instead of being positive, it's a negative number. So when I'm looking on this isn't money that's owed me. This is money that I owed them. All right, but let's say I'm not going to refund the money back to the bank for whatever reason. So to get this off my books, I'm going to have to then create an invoice. I'm not going to do a credit memo. I've got to do an invoice. So customers, create invoices. Now the item down here is where you're going to define what you're doing with this. Let's say it's money that's due from an agent. Instead of telling you owe money, which would have been the credit memo did, you can do a due from account, and this will now credit their amount by this over amount. Or if you're just doing either write-off and losses or gains, let's say miscellaneous income, description, whatever the case may be, amount 100, save anew. And I just didn't fill in all the different blanks and everything. But now the 4023 is zeroed out. Had I done a credit memo, I would have just made that even more negative. So by creating the invoice, I've zeroed it out. So you use an invoice when the amounts are not owed to you. It's money that you've been over-received on an account. Okay. All right. Credit memos right there. And this is stuff that we were just going over. Credit memos when the bank does not pay. Money's due from agents if you're managing agent expenses. How I define the customer jobs classes and items, all the stuff that we've just went over. And down at the bottom, if not billed to an agent, you can select write-off and losses, or you can do a miscellaneous income if it's a gain. And again, well, I just went over down at the bottom. If the account has a surplus, you would create an invoice to zero it out, and you can apply the invoice to an agent account or to miscellaneous income, and then it just is opposite of what you had done if you had done a credit memo. The rest of the presentation, or in my manual is just a lot of how to add different items, move items on a list, create agent accounts. Pretty simple stuff. I'm not going to go through all that as I've went over my time here that I was planning to go over the file with. But if you want to send me an email, of course, send you the manual. So before I wrap everything up here, just since doing this presentation down at the NRBA conference, I've had a number of agents actually email me and call me to inquire if they could hire me to manage their utility bills and expenses for them, sort of like what I do here for the agents in my office. So I'm just going to put up a poll right now. So I'm just kind of curious what the type of demand is out there for this stuff. So just a quick question. Would you consider hiring me to do this for you? Yes, no, maybe. It doesn't hurt my feelings. Just please answer it. I'm seeing about, some 20-25% interest, from people in me doing this for them. Again, I do have experience with about 45 of the different banks out there, so chances are I probably know how to handle the billing for the specific client. So if you would take a moment to just answer that question, I'd appreciate it. And if you would go ahead and send me an email, I'll happily reply back to you with my manual. Feel free to ask me any additional questions. I'll answer them to the best of my ability. I'm not an expert in QuickBooks. I'm probably not going to be able to answer everything, as I do have accountants who actually assist me with finalizing my files at the end of each year. But other than that, that's pretty much all I have for the webinar. I appreciate you all taking the time to come by and checking it out, and hope you all have a great weekend. All right, and for those of you who still need my email address, it's jamie.maloney, that's Jamie .meloni at floridamoves.com, JAMIE.MELONI at floridamoves.com. Thank you all very much. Have a great day.